Hi, in a series of banking details which we have been discussing, today we will see what is a financial system and then how financial system is there in India. So what is a financial system? It's a set of institutions such as banks, insurance companies, stock exchange that permit exchange of funds. So financial system exist on firm, regional and global levels. So financial system that encourages the movement of finance money from one place to another place in the liquid cash form between the business people and the normal residents. In electronic form also it is getting transferred, and also in other currencies also that's being done. So to facilitate all these things, we have financial system in India. What is financial system and what are their functions now? A financial system is economic arrangement wherein financial institutions facilitate the transfer of funds and assets between borrowers, lenders and investors. If you take in the banking scenario, a savings account holder comes and deposits his money into the bank. He is getting interest for that money which is being deposited. He also creates a fixed deposit and then keeps the money for which he gets interest. That money is being utilized in the form of CRR and SLR partially by the bank to be kept with the Reserve Bank of India. The remaining amount is called lendable funds, is being utilized to give it to the needy industrial people for the industrial development. This is how the cycle works. So what are the examples of financial systems? They are public banks, commercial banks, central bank, which is RBI, cooperative banks, state managed land development banks. So what are the three parts of the financial system? This whole mechanism is known as financial system, which is called money, credit and finance, are used as media of exchange in financial systems. The five parts of the financial system are money. So money is used as a medium to buy goods and services, which you are all aware. Financial instruments. Financial instruments are formal obligations that entitle one party to receive payment or shares from another party. Then third is financial market, fourth is financial institutions, the fifth one is central bank. So these are the five parameters which is available. So why do we need a financial system? The job of financial system is, of course, to intermediate between savers and investors in a manner that provides transparent and accurate information on risk and prospective returns, so that risk adjusted return can be maximized and the economy and the savers can prosper. What are the benefits of a financial system? To collect and disburse information that allows the most efficient allocation of economic resources, to create, maintain financial market that provide prices which indicates how well investments are performing. This in reference to the mutual funds, where there will be a technical expertise who will be studying the market movements and make your investments safe. Earlier we have seen about savings account and fixed deposits. Now I am referring to the mutual fund, wherein you invest in the mutual fund and the fund is being taken towards the market. This is better than the equity investment which is happening, where the portfolio, which say for example 100 rupee, is being distributed to various industries like cement, iron and steel, pharmaceuticals, aviations, like that. It will be distributed across depending upon the returns which is forecast. So what are the six functions of the financial system? Function 1, facilitating payment. Function 2, transfer of resources. Function 3, risk management. Function 4, managing information. Function 5, efficient middleman role. Function 6, pooling of resources. So these are the 6 functions which are being done by the financial institution. What are the four basic functions of financial system? Allocation of funds, serving production, trade and investments. The financial system helps production, capital accumulation and growth. And it encourages savings also. Apart from mobilizing them, it also allocates them for the various users for the end use. What are the various components of a financial system? Financial system is composed of the products and services provided by financial institutions, which includes banks, insurance companies, pension funds, organized exchanges, money changes they call, and many other companies that serve to facilitate economic transactions. What are main components of Indian banking system? The structure of the banking system, which we have already seen. Reserve Bank of India is the apex bank which controls the bank. It has audit function also and printing of currencies also. Under that we have commercial banks. Under commercial banks we have public sector banks, old generation private sector banks, new generation private sector banks, foreign banks and various cooperative banks. It also has developmental banks like SIDBIs are there, NABARD is there, it's also part of it. Are these important component of the Indian financial system? India being a democracy has independent pillars of the financial system, especially in the areas of banking, capital and stock markets, insurance, liabilities, claims, transactions and investments. So under the umbrella of the financial system, we have various categories. The main part of running the economy smoothly. Financial system provides the flow of finance in the economy, which leads to the development of the country's financial system. Indian financial system is a combination of financial institutions, financial markets, financial instruments and financial services to facilitate the transfer of funds. So financial system provides a payment mechanism for the exchange of goods and services. It is a link between the person who wants to save, the person who wants to invest, the person who wants to borrow. So there is a proper match between these two. So I will give you a brief sketch of how the financial system is there in India. We have already seen the various aspects. This is the crux of the details which is already being discussed. Thank you very much. I hope the financial system in India, this topic as largely covering various institutions which take care of financial movements, mainly the banks and non-banking financial companies, and then you have mutual fund market. It's a vast area under which, and we have regulators for all these things. You know that Reserve Bank of India is a regulator for the banks, and then you have Securities and Exchange Board of India, SEBI, as a regulator of mutual fund. For pension funds, you have PFRDA, Pension Funds Regulatory Development Authority, and you have National Housing Bank for housing developments in India. So there are various regulators which are there, and the subsidiaries are also there, which is taking care of the financial movements. Now, under all these things, the digital mode is also picking up very fast. And each one of you would have experienced about paying through the Google Pay, paying through the Paytm, and very rarely we visit banks nowadays. So it is from the brick and mortar bank, it is now slowly moving towards the digital banking in India. So this is the transformation which is happening. So I have seen Y2K problem also, where computerization took place in the banks, where we had manual ledgers. Every ledger, every figures have to be manually calculated and then posted. From that we move towards the computerized banking. So general ledger trial balance is now in computers only. It just comes with the press of a button. So the developments are ongoing. We are seeing a lot of changes in the financial markets, and it's quite interesting to see that India is emerging as one of the best digital penetrated market in the world. Thank you very much for patiently watching. Bye.